Let's go into the specifics with one particular loan originator and their group companies. I want to talk about the Finko Group and Varks. Less than a year ago, it was March this year, the Finko Group has been the biggest loan originator on Mintos. They had an outstanding loan portfolio of around 100 million euro. And now the company reminds a bit more of an empty nutshell. What is your take on this in general? And can you just briefly explain how you think that happened?
I think the take is obviously that well, I'm not sure if amazing is the best word to use, but just how quickly it can go from like one of the leading lending companies, not on Mintos, but in general in the market and in those markets, to what is now, it's not even empty shell, it's basically on the way of winding down and like kind of ceasing operations. It's just like to basically 6, maybe 9 months for that to happen. And then really, actually, it all started with Armenia case, and then also the same Armenia case. So like, still nobody knows like for what reasons what happened there. But then that basically ended up with all the company going into the wind down. So it is amazing to see, because we also saw how it was developing and how it was built, and it was really, as you say, one of the largest, with like more than 1,000 employees, market leading positions in the countries where they were operating, and then basically just is now what you could definitely say out of business or winding down.
I want to stretch a bit the topic of the Finko Group offered buyback guarantee. I just would quickly quote something from the Mintos blog. JSC Finko Group, the ultimate parent company of the Finko Group companies, is fully obligated to fulfill any payments to Mintos investors related to loans issued by any of the Finko Group companies. The agreement between Finko Group and Mintos was signed at the beginning of March 2020. Question to me is, how come this group guarantee has never been exercised by Mintos until this day, although many Finko Group companies have struggled or still struggle to pay back the loans?
Well, the buyback is what we also have now renamed as the buyback obligation. It's really about the company really covering those. If it's a group, then they cover if there are some problem cases, then they would step in and cover. But of course, that will be only if they have means to do that. If you look at the Finko, so basically Armenia, which was cash cow and generating all the profits, they were supporting other group companies. And the other group companies now, which when they saw that the non-performing loans increased, they have to do the buybacks. They don't have the means. But the Armenia is also in the wind down, so they're not generating any profit. So basically, what you end up, yes, there is a buyback obligation, but the provider of the buyback, they don't have any means. It's not the case that there is a magical group of Varks which is sitting on a cash pile and not not Varks, but of Finko on the group level, and that is not executed. There's just no assets into this group. The group consists, of course, of the daughter companies in specific countries, and basically since Armenia went into the wind down, there's no really kind of assets which we could use to basically exercise the buyback obligation.
But do you think in this regard it's fair or it's justified to promote a buyback guarantee to promote safe investments, which in fact they're not, and kind of a bit also misleading investors with securities that with eventualities they apparently can't be used and are not applied?
I think it's again comes down to education. So the buyback guarantee, and that's also one of the reasons why we went away from the guarantee, because there's some misconceptions. A guarantee means that it's 100% going to happen no matter what. So the guarantee is only, well, as good as the one which provides a guarantee. So there's no kind of United States staying behind the guarantee and then it's going to happen. And,
but even if you call it buyback, Sorry, but even if you call it buyback obligation, you know, what's the point of promoting kind of safe investments or promoting investments in that sense, no matter how you call it, if it's buyback guarantee, if it's buyback obligation? Don't you think this is kind of misleading investors to the ability, you know, or into the securities of the loans they're investing into?
Well, the buyback obligation is a credit enhancement, so it is additional security layer on that, and it provides additional security. So if there is some problems with some of the loans, and it happens not on the kind of across the whole group, then that actually does work pretty well. What we saw with the same UTSO in Kosovo, where they had the problem, so the buyback actually provided additional security. So in that sense, I would say that buyback obligation is still additional security layer. The thing though is what I totally kind of see your point is that it is not kind of 100%. There's no this notion of kind of guaranteed is something which we have to work on, and that is one of the reasons why I actually went away from the guarantee to the obligation, because even though guarantee is a legal term, it just basically says that somebody going to guarantee. It's the same as a mortgage business. I don't know, if you go to the bank asks for somebody of your spouse or somebody to guarantee your payments, but that doesn't mean that the bank is guaranteed to get back on the loans if something happens. So, but still, we changed to the obligation, and that's it is continuous education of investors. That it doesn't mean that it is the same as, I don't know, deposit guarantee.
Do you think from an outside perspective, or you from an inside perspective, can you understand when investors maybe struggle to see that there's, let's say, a shareholder overlap on Finko side, on Mintos side, and maybe that plays a part in why Mintos is not really acting accordingly to what they have promised in the first place, but rather kind of a bit hiding behind, sorry, there's no capability at this time being. We would sabotage, you know, forcing that group guarantee right now, and it would, you know, sabotage the leftovers, what is required to pay back the other loans. What can you say? Do you think this? Do you understand from an outside perspective that the shareholder overlap doesn't really look good on this particular situation?
I think from the outside, you can draw a lot of theories, and like there's obviously, we live in the world where there's a lot of conspiracy theories. So to be honest, when we look at the overlap, it always has been out there. So it has been depicted. If some people believe that it is a problem, then they had this information and could have chosen not to invest in those loans. If you ask me from the inside perspective, actually having the overlap is beneficial. So we have much better working relationship with those lending companies. And when it comes to the kind of executing on the buyback or basically forcing the buyback obligation, if we could, and there would be assets, there's no difference for us if it's affiliated lending company or not affiliated. So it goes the same process. Which is again governed by the agreements and our legal setup with the lending company. So we don't take those decisions lightly. So there's like a proper credit committees and independent people involved and so forth. So it's actually, it follows exactly the same process. So I would say that having a overlap is actually beneficial, because then we can have a better working relationship with the lending company. But well, I understand people who believe that overlap is something not good, which is fair. Everyone can have their own preferences, and that's why we offer different lending companies. If you look on the loans from different lending companies, so on Mintos now, if you look, there are 58 different lending companies. 4 of them are affiliated, and if people don't want to use those, they can invest in loans originated by 54 other lending companies. And that is obviously a question. And well, if you look at some other platforms which are, you know, the mono lenders, then there is 100% overlap between platform and the companies which originate the loan, because the platform is originating the loans, right? So every investor definitely can make their own kind of assessment, and that is the value which we can bring, is that there's a lot of different loans to invest in on Mintos, and different countries, different lending companies, borrowers, and so forth.
So basically, you don't see a conflict of interest with this shareholder overlap, but instead you find it beneficial because there's like closer collaboration structures in place.
No, technically, it's obviously technically, well, any overlap will be conflict of interest. It's a question how you manage that conflict of interest. So on our side, all the lending companies, we always have looked at them the same. It doesn't matter if there is some overlap of shareholders or not. And then when it comes to the recovery case, what we see the much better relationship is, or the working relationship is with those affiliated.
But probably you would draw an exception with Finko and Varks.
That it's better, or
that this in this case it helped Mintos or investors to recover funds.
Oh yeah, for sure. I mean, if it was not, then I think from Varks' perspective, they would just say, "Hey, here you go. Here's your gross portfolio of I don't know, this and that amount, and good luck with recovering and collecting those payments." Especially now when the war came into the play as well, that would easily. So I think many of the lending companies would just say, "Well, it doesn't matter for us. Just you can take over the portfolio and good luck recovering what you can." So in that respect, for sure, I think that investors are much better served that it was or it is there was some overlap of shareholders.
Right now with Finko, there's like assets worth 30 million roundabout in the recovery process, 17 million alone in Armenia, so connected with Varks. So what do you think are the chances that those funds can be recovered according also to that 2-year plan that you have in place now to repay everything by the end of 2022?
On exact numbers, it's the best is to refer to our website. So we provide updates there. So we have a separate section on recoveries. If you look conceptually, then it's still too early to say. Like we can provide some estimates, but also previously we provided estimates, but nobody knew that there's going to be war between Armenia and Azerbaijan. So that also didn't help us, or the Varks to make collections. So let's see how we go. So our intent with every recovery case is to recover 100%. Obviously, we also are cognizant that it's not going to be 100% in each and every case. So also with Varks, we do our best to recover as much as possible. Will we get there? Let's see. It's still, as with any recoveries, it's a long play. So there's still a lot, especially for Varks, a lot of loans are still outstanding. They have to be collected with all the pandemic, war, and so forth. It doesn't come that easy. So, but even with all that, investors have already seen that, I guess, already more than 10 million euros have been recovered.
Okay, why have investors not been involved somehow into that, submitting a feedback to that proposal on that restructuring plan until the end of 2022, like it happened, for instance, with Capital Service? So where do you draw the line between we're involving investors and asking them about their feedback, or we, just make the decision on our own what we believe is best for the investor?
I mean, Capital Service was more as an exception that we kind of involve investors in negotiation. It was more that basically Capital Service just came with such a ridiculous offer. They said, yeah, but the investors might want to like this offer, which we said, well, we are sure they're not going to like. And then we just made a survey, and what I think like 95% people said that, well, sure, we're not going to accept it. It's kind of a ridiculous offer, right? So in general, at our scale and having that many investors, it's very hard for us to have any proper way of involving investors. So say in the same, I think in Finko or in Varks, it's maybe like 60, 70 or 80,000 investors who have invested. Like there's no good way how we can actually involve all of them and all of them have proper say how it is should be done. And if you involve, it's just like super lengthy process and doesn't bring any benefit to the negotiation. So negotiation is basically, in general, we would see that investors, well, at the end of the day, investors have to trust that we do our best to recover the funds from those cases where there are recoveries.
Another question related to Finko and outstanding loans. Why have only 10% of the purchasing price of that Sebo and Mogo deal have been used to cover those outstanding debts?
10% were...
Wasn't it 10%? Like the deal was like...
It was a small percentage, yeah. If you say about the percentage, what went to the to actually investors, it was a small, because the deal involved restructuring and they had to pay up the equity as well. So that basically they had to bring it back to statutory levels, and then that meant that the deal price was higher, but the net proceeds which we had for investors was smaller than that.
Okay, but you think like, so there was nothing more to give for investors other than 10% then in that case?
No, it was maximum. I mean, we were happy that, well, we got actually the deal done in that case, because basically what we could have ended up is with a 15 million portfolio, which is going into the wind down, and then investors would see some capital loss. Now, at least we saw zero capital loss. Well, it's still, of course, under Mogo, but Mogo is providing the buyback obligation, but we got also some proceeds, which obviously, in the best case, we would get the most, the more you get, the better, but in that case, it was actually very good, well, in our opinion, good deal for investors, that they could actually, those who had invested in Sebo got it covered by the Mogo, and then the rest got at least some proceeds from the deal.
On the Mintos blog, also looking back to March, it was stated that the Finko Group had a net profit of 17.6 million euro in 2019. Just a couple months later, then in June, I would like to quote this, not to read anything or quote anything not properly. After a thorough review of Finko Group's financial standing, the group guarantee is not being exercised, as the group would not be able to cover Varks' outstanding portfolio on Mintos in a single payment. Possible legal actions to enforce Finko Group's guarantee at this moment would jeopardize the overall expected recovery amount, both for Varks and other group companies. So going from that incredibly high net profit that was also then promoted on Mintos in March, then 3 months later it was said we couldn't cover the outstanding portfolio in a single payment, but maybe it could have been a partial payment, or I don't know to which extent that actually happened. Can you comment on this, please? And, you know, because I think many investors are confused, where has all that money gone? Why is such a profitable and huge organization that collaborates with Mintos? What can happen in a turn of 3 months from totally high selling, you know, kind of safe investments with group guarantees, offering or claiming that there's a huge earnings, a highly profitable business operation, and then 3 months later there's obviously not enough to cover some outstanding debts then to investors. So what can you comment on this?
The profit obviously doesn't mean that it's kind of cash on the balance sheet sitting. So all the profits would have to obviously check like in details, but in general, as any company which is in the growth stage, all the profit is reinvested in the business. So even though they were profitable, so Finko was very much growing significantly in 2019 as well. So opening up new countries. So basically you have capex. So Armenia was in a way supporting those expansion plans. So the profit doesn't mean that there is cash on the balance sheet. So it's at that stage. So basically they are investing it. Reinvesting in the business and growing the business, and it's the same Armenia. So a lot of the profit was reinvested in growing the business in Armenia.
Let's talk about Varks, because I did something which I rarely do. It would be the wrong phrasing, but I looked at the Varks financial report of 2018. And probably it's a bit of a longer introduction now before I come to that question. But basically it was Or I tried to sum it up before I quote it. I can maybe embed it to the video somehow. But basically, Varks was in breach with two figures that were required from Mintos side, which is one an equity to asset ratio, and the other was a cash buffer ratio. Overall, like there was a secured, or maybe I have to read it, secured loans from other entities amounting to 8.2 million Armenian dollars with a contractual maturity less than 1 month. According to the terms of the agreement, the organization is subject to a debt covenant stating that starting from 31st of December 2018, at the end of each quarter, the equity to asset ratio cannot fall below 20% and cash buffer ratio should not fall below 5%. Now, and when I checked the figures for 2018, basically equity to asset ratio was 13.76%, cash buffer ratio was 1.33%. And then it continues, as of 31st of December 2018, the organization was in breach of these covenants. Management obtained a waiver on 23rd of April 2019, stating that the lender has waived the organization's failure to comply with the above mentioned covenants at 31st December 2018 and 31st of March 2019. Now, I'm pretty sure that the waiver on April 23rd has been kind of a necessity by the auditor in order to sign off the report then, which happened a few days later. What I'm wondering is, up until the license has been revoked a year later than with Varks in March 2020, I mean, Varks was rated on Mintos with a B+ rating, and also 95% of their net lending portfolio in 2018 was funded through Mintos and Mintos investors. Now, to me, the question is, assuming Mintos was fully aware of Varks' dependency on one side, but also on the financial breaches, why have there been no consequences applied before the license was then revoked a year later? But instead, Varks loans, you know, they have been pushed on Mintos with forward flow, with a new product. They have been pushed with cashback campaigns. Overall, it's honestly a very big mystery for me how Mintos has looked at this situation, maybe has overlooked the situation at Varks, understanding their high dependency and also their financial situation, which just showed to be not to the extent Mintos would have liked to seen it. Sorry for the long question. No.
Yeah, it is a long question. I guess how we look at that is like the covenants themselves is obviously there so that we can have a proper kind of figures to look at, and they have to follow them. But it's not only Varks. In other cases also we see that the covenants are breached, and that's something which happen and will happen. Then the question is, what do you do once they are breached, and how quickly they can be brought back to the required level, which is actually the same what you would see in the bank. So that when the bank gives you all the credit, they have a covenant. If you breach, it doesn't mean that you are defaulted immediately. So there is an action plan how it has to be brought back, and the same we do with the lending companies here. So we set out the covenants so that we can basically monitor them better, and then if some of them are breached, then we put together an action plan, and that is work towards to bring it back. When it comes to Varks, I think to the extent when you say that it was pushed, so the rating is it wasn't like the best rating. Obviously, if it were not perhaps for those things you mentioned, it could have been better. But on a loan portfolio basis, they were one of the best loan originators in Armenia, so one of the leading players, originating quite a lot of loans and having a good payoffs, and that's basically why we allowed them to place them on Mintos. If that answers the question, because it was a bit long question, so kind of specific follow-ups. Comment.
No, I see. But to me, it's less about the waiver in general. I think obviously you see there's a debt or there's a covenant in place, and you try to put certain rules in place. And obviously when there is a breach, you know, I guess it was a necessity from the auditor. I think it was KPMG to say, look, unless this is figured and you get a waiver, we're not signing off this report. I can imagine it could have went down like this. that's not the point to me. The point to me is Mintos understanding the financial structure or the how to say this, the financial overall situation of Varks, that maybe risk haven't been put into place or assessed accordingly for investors. And it's okay, it's a rating, it's a very unfortunate rating, I guess, but it's also the point of, I think it was very unfortunate then pushing with a new product forward flow, especially with Varks loans, which I think you were probably quite upset back then, and also when the license was revoked, but you also offered initial cashback campaigns. Why do you do this with a loan originator, understanding they depend very much on investor funds from Mintos, and secondly, that have obviously some financial issues, regardless of their positioning or their standing in Armenia, that makes it very hard then, in case a license gets revoked or something else happens, some circumstances, that this is kind of screwing up the entire situation, and also kind of was a very big blow off, I think, to also start to blow up the entire Finko organization then as a consequence, with many aspects then taken into consideration. The question is why Mintos hasn't been more careful on this, and why you just push to promote those investments, although you should have seen very closely what's going on and what's wrong on Varks' side.
I think I would disagree that the license was not revoked because of the financial reasons. Sure. So the license was revoked for, well, still we don't know, like, for exact reasons. So some say it's political, some say like the market participants. Well, nobody knows like what happened. This is the license itself was not because the Varks was like financially weak or something, or revoked. So on that front, I would say that actually when we look at at their loans at that time, so given the kind of our assessment, it seemed like a proper return for the risk investors are taking. So in that sense, I would say that it wasn't like anything specific to Varks or pushing or something. It's a good loans originated by one of the leading players in Armenia, and they were positioned on marketplace as such. The license itself, I would say, it was much more kind of a random event which happened, not really something which we could see from the financial, because it wasn't really financials related. So that's perhaps how I would see the situation there.
And would you say Mintos, again, like the discussion we had before, like understanding or having the information at hand that you had back then a year ago, you made the best decision, and you would basically do it all over again, moving forward the way you did?
Well, with hindsight, it's super easy to say, of course, that I don't know, we should have had like, that they can, but that also wouldn't change the situation much if there would be kind of limits how much they fund through the Mintos. So if it were just 20% what they would fund through Mintos, the situation would be the same. So 20% of the portfolio, once they go into the wind down because the license is revoked, so it's still under risk and would fall into the recovery. So the situation would be the same. So maybe the amount would be different. It could be that, well, the rating is something which perhaps could have been scrutinized even more, but it's basically, I will have to involve the risk team much more in this discussion, how they go about that, and kind of go into more details about this. Overall, I think definitely you can, with hindsight, you can improve a lot of things. With information which we had, I think we try to do our best in that situation. I mean, we just also understand that, well, I just also remembered that, well, at that time in 2018 or 19, when investors were themselves doing assessment of loans of Varks, they said that it's actually one of the best loans available on the marketplace. So it's not only us for putting them on the marketplace and making assessment, it's also investors. So there wasn't anything like specific which would make us think differently.
You mentioned twice now that you still don't know exactly why the license of Varks has been revoked in Armenia. Can you explain what your assumption is, why it has been revoked? And secondly, I don't know, Armenian central bank to that extent, to that extent, but maybe I can assume that even if there was some issues with Varks, I don't know if that's political related or whatever it is, maybe you can explain what your take is, but wasn't there maybe not anything like a notice or any like some sort of warning, something that, you know, obviously Varks didn't comply with some sort of rules that could have been adjusted? Because it's hard for me to imagine that, you know, this decision just happens from one day to the other without any warning. Also understanding this is like one of the, as you said, top non-bank lending companies in Armenia, trying to service a lot of loans, a huge amount of loans. How can that happen overnight without a warning? And what's your take why the license has ultimately been revoked then?
Obviously, we do know the technical reason. So there was just technicality which the central bank used. So the real reason, even talking with Finko and Varks, still people would just speculate. So there's no good understanding, and the reason is the same what you say. If it is kind of unpredictable or unprecedented, it's like in one day they just say no, that's it, you're going to lose a license, even though the technical reason which was brought up, the Varks was ready to remedy it and to change it and to pay in the capital, basically to repay the subordinated debt or the debt which they had to repay, but basically was said no, that's it, you have to basically be gonna revoke the license. So that basically perhaps speaks of the kind of unpredictability, and I would say at the end of the day, perhaps what we have to put it down to is basically the country risk, and that's basically would fall under the country or kind of political maybe, or I don't know how to call it, but the risk which you cannot really explain in any other way.
Okay, so my take on this is there was a technical reason. Varks was about to fix it, but then eventually the central bank decided to revoke the license.
I wasn't that. It was, I think, basically Varks said, yeah, well, we can fix it in in a week or in a month, and then the next day, central bank, without any consultation, comes out and says, no, the license is revoked. Even though they have had the same setup for like last 3 years, had always discussed with the bank, everyone was fine with that, and then all of a sudden they just changed their opinion. So it's I mean, I was not in the room. It's hard for me to speculate. From what I know, there's still nobody really understands what happened and why it happened.